So the recent market volatility, particularly in big tech and big biotech areas, has really spurred talk once more of perhaps we're in a bubble. Is the market too extended? Is sentiment too extended? And certainly by multiple measures there is some justification for that discussion. If you look at valuations, for instance, looking at the S&P 500's forward price to earnings multiple, that's actually gone right back to the peak at the 2007 market top. Not quite back to what we saw during the dot-com bubble, but certainly on that measure we're looking extended. If you look at sentiment measures, investors are feeling very confident, perhaps even complacent. They're holding record low levels of cash, so this is the whole cash on the sidelines. That's actually gone down below the previous two market peaks. If you look at anecdotal evidence, so look at Charles Schwab, the brokerages are saying that they're seeing a surge of new trading activity as retail investors come back into the market. They're very excited about what's going on. If you look at, for instance, the excitement over IPOs, the Alibaba, King Entertainment with the Candy Crush IPO, a lot of excitement about these new issues coming to market, new tech, but kind of in shades of what we saw during the dot-com bubble. A lot of these are not actually profitable companies, and if you look at the percentage of them that are money-losing IPOs, that's actually returned back to dot-com peaks. So certainly on multiple areas we're seeing justification that perhaps things are getting a little bit too hot. The flip side of that is that the fundamental story is still fairly supportive of the market. So if you look at where the economy is, there's very little evidence that a new recession is on the horizon. The recovery has not been a barn burner by any measure, but it has been fairly consistent. And also the Federal Reserve is still stimulative. Talk now is when will the first rate hike take place, perhaps sometime in early 2015, maybe the later part of 2015. But the fact remains that they're still pumping stimulus into the economy now, 5 years into a recovery. So although on multiple measures things are looking a little bit overheated, the fundamental story still justifies perhaps consistent gains, but maybe not the performance we saw in 2013, which was a record run higher. So maybe on the order of 0 to 4% annual growth in the stock market performance, but maybe not a catastrophic fall like a lot of commentators are looking for.